little bit on the way down, except for the fact that you lose volatility as it continues even further down. But I'll tell you, it does play into this whole scheme of why options are so important, why they're so important to have knowledge, and why you have to have protection on your portfolio.
One just thing to add, as things were falling apart, and you think, all right, I want to buy some things at these levels.
Right.
You had to put in a limit order, because if you put in a market order, the same thing happened on the way up. You would think you're getting filled at 50, they come back.
$10 up.
Right.
You don't even know.
From 239, Melissa, hey guys, from 239 to about 252, as Karen was saying, you put in that market order, you traded stocks down $5 and traded them back up $5 by the time it was over. But the truth is, you had to get out there and you had to cover your positions. No one knew where this knife was going to fall, unfortunately. So if you put out a limited order, you did nothing for the most part. At least the market orders closed out their position, right, wrong, or indifferent.
You know, people outside our world will start to learn about this later tonight and obviously in the papers tomorrow. So what little confidence there was on the retail investor side in the stock market has now thoroughly been squashed. So you wonder what happens going forward.
You cannot emphasize that enough. Guy and I were talking about it before the show. You cannot emphasize you are already trying to rebuild credibility.
Right.
I mean, come on. This is going to kill any kind of credibility that the average investor feels that they're playing on a level playing field with a situation like this today.
Not to prop up the New York Stock Exchange stock, and I'm down here. I'm not an owner of it. My partners are.
Yeah,
but the truth is, this is the only one with a circuit breaker.
Sorry to cut you off. We have some more breaking news out of Citigroup. We go to Matt Nesto back at Englewood Cliffs. Matt.
All right. Thanks, Melissa. Very much appreciated. Again, we're talking to a lot of people. Everybody's talking about this day on Wall Street. But a person familiar with the investigation at Citigroup is saying that the focus of the trading probes is on those E-mini futures again. And they're saying that that 2-minute window around 2:47 Eastern time today, some 16 billion in futures were allegedly traded. Now, Citi's total E-mini volume for the day, the entire day, is only 9 billion. Which would make the origin of those trades somewhat suspect in terms of Citigroup's probe. Citigroup itself saying, just like everybody else on the street, they are investigating the source of this volatility, but at this time they say there is no evidence that they were involved in it. I would like to just point out a couple of other things, is the fact that we've talked about Accenture and the trade to zero. There's at least 8 other stocks, index members, Accenture's not in any of the major indexes, that have a zero print on the day. They include Exelon, ticker EX. Centerpoint, CNP, both in the S&P 500. In the Russell 1000, Eagle Materials, EXP, Genpact, ticker G, ITC Data, and BRO, Brown & Brown, also with a zero print on the day. And then in the small cap S&P 600 index, Casey's General Store, CASY, will show you a zero print as well as Boston Beer, Sam Adams, one of which we probably all need. Having gone through what we've just gone through. Now, I want to say one thing, too, is our intraday charts aren't picking up that minute zero print on any of those trades. But I can tell you that if you look at Thomson Reuters, if you look at the intraday low on those stocks, you will see a zero print on those. And we heard, and I'd like to run the bite if we can, what the NYSE CEO Duncan Nieder said about the probability that a lot of trades are going to go by the wayside.
In periods of volatility like that, if the market's going to gap, we go into what's called slow mode. Now, lest we think that's prehistoric, that means instead of trading in milliseconds, we're going to take 30 seconds or a minute, and we're going to seek out liquidity. We're going to give people an opportunity to discover the price on a block. When that happens, the other markets don't have to honor our quote. In other words, they don't wait for us to reopen the stock 30 seconds or a minute later. So it doesn't take much volume to move some of these stocks a lot. So we've said to the other exchanges, in periods like that, it's not really a trading halt. It's not an hour. It's 30 seconds or a minute. Wait for us. They say no. And then think about it. If you've got a few market sell orders and the next bid in a stock like Procter & Gamble is down 20 or 30% on a thinly traded system, that's where the stock's going, because the computer doesn't have any circuit breakers. The computer doesn't have any speed bumps.
Right.
And he's right. It only took about 12,000 shares at that low, below 40 price on Procter & Gamble on 25-odd million, Melissa, to move that stock down. So there will be some busted trades, no question about it. And also some busted feelings, too, because if you sold that stock to somebody and they bought it at that and then saw it buy back, they might have traded it on the way up, and then they're going to be stuck.
Right. All right, Matt Nesto, thanks a lot for that.
You know, to Steve Grasso's point about the human element and why it's so important, I mean, this just exemplifies everything. I mean, when you're looking at these algorithms, what happens is, as they trigger, they pull back. And with each pullback, it gets not only wider, but less liquidity. So that's what we were looking at. I mean, Karen and I were talking in the green room earlier, and she said, I was looking, and in some cases, these markets just get wider and wider. Well, that's because of all the algorithms that are out there are built. If they get hit the next time, they continue to get wider, wider, wider. That escalates that volatility up because virtually, where's the offer? Where's the offer? Everybody's looking for an offer. They can't buy something, and as that occurs, you see that huge acceleration, and that push came right at those moments that everybody's talking about. Whether it was 16 billion, whatever it was, when those E-minis were hit, that's literally when this whole thing fell apart. That's when those algorithms expand.
And Mel, if you're looking for evidence, the evidence will come in the form of a P&L off a program trading desk, be it Citi or be another major player. And it's that P&L is getting formulated right now. I mean, somebody knows that they lost a lot of money today. It's going to come out very,
or they will know
very
momentarily.
Shortly.
Exactly. Let's put our ear to the wall, get the hedge fund take on what has happened today. Let's bring in Anthony Scaramucci of Skybridge Capital, otherwise known as The Hedge. And Anthony, let's connect all the dots here, because we talked about the importance here on the desk of the human aspect to in executing trades. And also, there's a lot of talk about financial reform and getting rid of prop desk trading. Connect it all for us in terms of what this might mean in a world if there were no prop traders out there.
Well, the first thing we're trying to do on Fast Money is the autopsy, see if we lost any hedge funds today.
Yeah.
Because with leverage in a hedge fund, getting spiked down like that could have blown through something. But the clear thing that's going on right now as it relates to financial regulation, if you see gaps in volatility like that in terms of spreads, you need more capital in the system. So if you're thinking about taking banks out of the system as it relates to speculation, this could be a potential further risk for the retail investor. It's just something to think about in periods like this.
Anthony makes a great point. You know, again, the human factor is huge, and Steve mentioned that down there. But again, any confidence that anybody has going forward, and it's important not to cloud the picture. To me, the bigger picture today is the fact that the market closed down 350 after being down 2 and change the other day, and there are fundamental problems in the world, not least of which are Europe, but then you put on China on top of it, that Australian resource tax that we talked about. There are a lot of factors that work negatively right now.
Anthony, let me ask you, prior to 2:30, there was a story here, and the story was that this idea of decoupling, that the U.S. recovery can decouple from what's going on with the world, was breaking down. The technical selling and the triggers and the possible errors, that happened at 2:30. But earlier today, there was a fundamental breakdown. What were you hearing in terms of people talking about this? Decoupling is not going to exist.
There's definitely selling pressure. I think there's a lot of evidence to support that decoupling doesn't exist. This market probably felt like a 400 down day. It didn't feel like a down 900 day. If you blinked, you missed it. Okay, and it shot right back up. This is the second bomb in Times Square that sort of didn't go off this week. So we just got to be really careful here. If it was a key punch error, if it was a system error, these are things that they're going to check. But you know, those three stocks getting hammered like that can disrupt an entire world. It's just something to be really cautious about going forward.
Okay, Anthony, thanks so much for joining us here and giving us that perspective. You know,